Guys, welcome back. All right. So, today we're going to be learning about chapter 12, which is primarily all about payroll. Yay! Now, payroll is by far one of the most difficult things to understand because you can't apply this to everybody and make it same for everybody, okay? Because when we're looking at payroll, everyone has a different type of wage rate or salary rate. Some of them are commission based. Some of them can be your some of them can be some of them can want different withholdings. Some of them might have children. Some of them might even be married. Okay? So, the whole purpose of understanding payroll is it's pretty straightforward. Your intention of when you're building a business is you're going to want to have employees. Okay? Especially if you're a sole proprietor. Okay? So, here's a little FYI. If you plan to be a sole proprietor, you cannot be the one to do your own books. Okay? That means you need to have a separate person to do your books. All right? And this is all based on the Sarbanes-Oxley Act, okay? Because we had some people who were the owner and also did their books, and guess what they did? They cooked their own books. So that's why they say they have the rule in place that if you are your own sole proprietor company, you need to have a separate accountant, whether they're an employee or an independent contractor. You need to have someone to do a separate your books separately. Okay, all you can do is validate the transactions and sign whatever you need to sign, but maybe double check their work, but you yourself cannot do the books. Okay, so this is exactly why we need to have employees or other things into play with that. And other things that we can also calculate is if you have employees, you have to also think about, are you going to give them benefits? Because that is very important to understand when you're dealing with having employees, okay? You need to work out what kind of compensations are they going to be. Are they wages? Are they salary? Is this person been here long enough? You're going to give them $16 an hour? Or someone who's interning, you're only going to give them $10 an hour. Every person has a specific task or specific duty, and they may have different compensations for that, okay? So when we're dealing with payroll, you need to make sure that you factor out the compensations. You need to be aware that if you have employees, you are subject to have taxes on them as well. And are you going to have some benefits for them to be able to have, such as do you provide health insurance for them? And lastly, do you provide deductions? So, do you treat them out? Do you provide meals for them? Those are all deductions, okay? So those are the main 4 factors that we want to keep in mind if we plan to have employees, okay? So first things first is we need to recognize one thing, because in order to have employees, you need to have an employer identification number, which is basically it's going to link to you and link to your business to the proper taxing agency, such as for example, like we have Social Security, right? We have a Social Security for individual people who, we have to use that number in order for our employers to properly tax us. I'm sorry, is someone having the fan on? Or
Oh, I can barely hear you.
yeah.
Yeah, I can barely hear you.
All right, I apologize. I know it's hot. The only thing, if you want to have your fan on, please either put it behind you and not next to your computer, because your computer will pick up everything. Okay, so For example, there is a difference between regular Social Security and having an actual employer identification number, okay? So if you look at the difference here, I panned it out. Social Security is usually given to specific individuals, okay? Where an employer identification number is usually given to businesses. Pretty straightforward, right? It's in its name. But what a Social Security does for you is, again, if you're working for the company, they would use your Social Security so they can put into the taxes through your Social Security number. For the employer tax identification number, it's different because for them, they use this number to apply for the taxes that the company needs to pay in order to have employees. So that is usually the very first thing is when you open up a business, it is mandated that you need to also open up an actual employer identification number. Okay, and usually this is issued by the IRS. So, usually it's for those types of businesses, so any business organizations, and the number kind of looks a little different. Businesses, they usually start with 2 digits, and then after that, it's going to be the 7 digits. Where ours is split to 3, right? It goes 3, 2, and 4. Okay?
Yes.
So that's just one difference, okay? Now, can you use your Social Security for your business? As a sole proprietor, yes, you can, but you want to be very careful because if you are the sole proprietor, you don't want to give the IRS your Social Security number unless you're an independent contractor. That's the only exception there. Reason being is because IRS is not going to associate the difference between your personal taxes versus your company taxes. So make sure that you understand that all businesses, no matter if you're a sole proprietor, independent contractor, whatever you are, you need to apply for an employer identification number. And how can you do that? Easy. You got the IRS SS4 form, which is to apply for your employer identification number. Now, yes, this is provided by the IRS. However, the minute that you open up your business or apply for a business license, you actually need to do this on your own. They're not going to give you the form and expect you to do it. Okay? So yes, you can process business without an employer's identification number. However, you're going to have to use your own Social Security number, which is, again, IRS is not going to differentiate the difference between your personal and your business taxes. So you want to be careful with that. So that's why you need to apply for the SS4, which, it's pretty straightforward. This form is everywhere. You can find it on the IRS.com. And it's going to look similar to this. So it's going to give you 2 things. It's going to ask you, what is your legal business name? Blah, blah, blah. Who's the owner? What kind of business organization you are? So basically, you just submit this to IRS and they should give you an actual employer card. So it's similar to a social security card, okay? Mm-hmm. So again, that is how you need to do this. So again, this is primarily for those individuals who seek employment, but they also, I believe, anybody that is actually in the business of selling tobacco or alcohol, they have to apply for it because of the whole taxes on those kind of items. Okay, so make sure that you understand what kind. I would highly recommend if you start a business to get one of these, okay? Mm-hmm. So now that we looked at that, looking at how we can apply for our taxes, we want to understand, well, what are the different types of employees you can actually have when you're thinking about doing payroll, okay? So there are 6 types of employees, okay? You have your number 1, which is their common law employee, which is a regular employee, meaning they are a, regular 8 to 5 employee, okay? You have your statutory employees, which I'll go ahead and talk into more depth after this slide. So I don't want to have to explain it twice. So this is just a list of the types of employees that you have. You have those ones, then you have statutory non-employees, then you have your independent contractors, then you have your individual referred by temporary agencies, and then you have leased employees, okay? So again, the two that I'm highlighting for you guys, so you guys can recognize this, is that the common law employees and your statutory employees are the only two people, the only two types of employees that are going to be on your payroll, period. Everyone else is going to be considered as a business expense. Okay? And so, for example, they're not your employee. So again, your independent contractor is not your employee. You have no responsibilities for them except to pay them for what they've done for you. That's it. Okay? So that's one way of looking at it that way. Whereas your common law ones, you need to pay into their Social Security, you need to pay into their Medicare, but those two people, okay, so your common law and your statutory employees are the only two types of employees that you actually are fully responsible for. Everyone else is just going to be paid as an expense, okay? So let's go ahead and talk about the difference between each individual type of employee, okay? So for example, your common law employee, again, what can they do for you, okay? They are considered by law a regular individual that provides the service for you, and you as the employer determines how they do it, when do they do it, why do they do it, XYZ, everything you can think about. So basically, you as that's how we determine the difference between each individual, right? So they are the person, they're given a specific task. This is how you perform it. I want it done that way, and I need it done I need it done today. Okay? So again, it's asking you when, how, and what. What are you doing? When does it need to be done? How do I need it done? XYZ. So the employer has full control of everything that you do when you work for the company. Okay? And that's how you determine that's the common law. So typically, they could be part-time, they could be full-time, they could be salary based. Okay, so that's the rules for that one, is that they are being told exactly what to do and how they want that task to be done. Okay, so they're typical 8 to 5 regular worker. Right? Your statutory employees, okay, they function a little different. However, they are still part of your team, as far as if they are either your sales representative or if they are your delivery truck person. So for example, I'm in the business of a grocery store, right? If I have someone to go out to the field to go pick up my delivery, they are going to be considered as your statutory employee, because technically a way that you can look at it is if a statutory employee, right, they're the one that's going to be doing work outside of the office, okay? So they're going to be your delivery truck, they're going to be the sales representative, they're going to be the workers that do classes outside of the location, okay? Something like that. They typically have the same thing, same features. You tell them how you want the job done, when you want the job done, and what the task is at hand. Now, again, the one thing for example, delivery truck drivers, okay, those ones, they have obviously extended hours, just because you can't expect them to clock in every day at 8 o'clock and tell them to be back by 5 o'clock. So they kind of tailor their own schedule. All you tell them is I need to get this delivery done between this time to this time. I need it now, and this is all and that's what I need done. So basically, the task is given to them. They tell them what they want, how they want it done, and when they want it done. All this person is capable is when they can do it. Okay? So that's just one example of a statutory. So they do the work outside the office. Think of it that way. Okay? Next is going to be the difference between common law and statutory, which I just explained to you. So one major difference is employers must withhold in federal income tax withholdings, okay? Whereas statutory employees, they are not required for you to take any federal income tax away from them. However, the other taxes, such as Medicare and Social Security, which is FICA by law, every person that has employees must pay into that. Those is what's common between the two. You have to pay for both common law and for statutory employees. Okay? So the real difference is one, you're paying it, they're getting taxed by the federal government for working. Whereas statutory, you don't need to take that out at all. Okay? So that's just only one difference. So now we're going to be looking into the other different types of employees. Okay, so they're not technically employees, but they are a type of employee, and this is where we're talking into, or maybe a different type of worker. Let's just say. Okay, so again, all of these workers that we're going to be talking are going to be considered as business expenses to your company. Okay, so the first one we're going to be looking is statutory non-employees. Statutory non-employees, right? They're pretty straightforward. They're similar to independent contractors, except they are employed. Usually, they are taxed by the federal government. Okay, so this is a little different. So statutory non-employees usually they get taxed for the federal income tax withholdings, whereas independent contractors get to take the whole check, and they have to pay taxes towards the end of the year. That's a small major difference. However, a few things that they have to do is they do have to fill out a 1099 form for both of them because they're not technically employees, which are W2 forms and W4 forms. Where, these kind of workers are 1099 forms. So again, statutory non-employees, what happens is the reason why they're actually considered this is because, okay, yes, they're told on how to get the task done. However, what they also get the freedom to determine how they get the job done. All the employer does is, I want this job done. The individual gets to use whatever they want to try to get the task done. And whatever time period could be however they're on their own time or however they want to report, okay? But for most cases, for example, for a statutory non-employee would be like a real estate person. So, they don't have to work all the time. Real estate agents, they can come in and they can, and they're commission based. So they're based on whoever they contact, right? So they're not really paid a steady wage unless they are, unless they apply for hours. But you know what I mean? Like for them, the task is sell a home for me. How you sell it, you tell me. Is it your persuasiveness? I don't care. As if you can sell the home, that's all I care. That's the task I give you at hand. So that's an example for that one. Okay, so again, direct sellers, okay, people who are sales representatives, right? I don't care. As long as you sell the product and how you get it done and when you get it done, you let me know and I pay you that way. So that's one way. And then for independent contractors, so again, independent contractors, right? They're a little along the lines of anyone that's grouped into a specific area, right? So most commonly that you would see would be doctors or dentists, right? Usually they work in a big facility and there's a bunch of doctors in one facility, and what they are to the company is they're just only representing the company, but what they're doing is they're just doctors, right? So dentists, same thing with dentists, right? If I work in the medical field and I'm working with a doctor, the main job is the job is the title. I'm a doctor. I can prescribe. I can do whatever I want based on the case. So it's not, they don't even have a real task at hand. Their only real task is to take care of their patients. They can determine how they get the job done, when they get the job done, XYZ. So they get to schedule their own time. They get to do whatever they want. So employers do not have real control over on what they can do. Okay, so understand that's pretty much that's pretty much how they are labeled as independent contractors. And again, so statutory non-employees, they get taxed for federal, whereas independent contractors, they do not get taxed they do not get to tax, so they get to take all the money. However, they need to pay their taxes on their own at the end of the year. Okay? And then lastly, the other two is going to be anyone that's referred from a temporary agency, and then leased employees. Okay, so this is pretty straightforward. If you understand, if you've ever gone through an employment agency, so such as Dieter, or such as Robert Half, which is the temporary agency for accounting. Okay, so if you guys want to go through there to try to get your foot through the door, then yes, it's a temporary agency that looks for work for you. Okay, so whoever the employer is will be given a task, blah blah blah, how they want it done, blah blah blah, all those things, right? And what the temporary agent does is they just find the workers for that specific project, and they just call them in for just that temporary work period. For example, it could be a 3-month long project. So temporary work agencies, they work, but it's very temporary. You're probably going to get a job here and there, and you'll be, you'll just have to keep working a bunch of temporary jobs until you can fully obtain an employee job. So again, that is exactly what a temporary agency does. It basically helps individuals to try to just get into the job, but it's a very temporary. It's not for a long time. It's for a short period of time, and they do not need to pay the workers, okay? Because again, they actually pay the agency, the business, the employers that are looking for these people. They actually pay the temporary agency for those employees. So for example, my project needs 5 workers, and I'm going to spend $50,000 on that project. Boom, I just give them a straight $50,000, and how the temporary agency pays the individual is going to be based on them. And the only thing that sucks about this one is they do not get any tax write-offs. They do not get anything. You're just going to get your solid check, and you would actually have to pay the tax on your own. So temporary work agencies are not very good for that reason. Now, what's the difference between that and a leased employee? So again, a leased employee is pretty similar to the temporary agency. So what I've noticed is there are temporary agencies out there that actually provide leased workers. So whether they're bounded by a contract. So, for example, I'm contracted by the temporary agency. However, the employer, if they say that you're actually a good employee or a good candidate, what they can do is they can buy out the contract from the temporary working agency and put them on as an employee, as an actual staff member. So that is the only difference between temporary work agencies and leased workers, because at least the leased employers, right? They're only contracted with the temporary agency, and the company can buy them out of their contract to fully employ them. So that's just a difference. And again, you do not pay the workers. They are based on, you pay the agency until you buy them out of their contract. That's pretty much straightforward. Nothing too complicated about that. So now we've discussed all the types of employees that there are out there. So now we're going to be actually moving into the actual process for payroll. Okay? So here are the steps to payroll. There's exactly, in this one, I say there's 5, but there's probably a lot more. It can range to anywhere how you determine it, but I say there's 5. And yes, so you have to know that there's 5 steps to doing employee taxes. And then there are 3 steps to do employer taxes. So, okay, so this is exactly why payroll is very difficult, because not only do you need to calculate employees' taxes, you yourself also have to do employer taxes. So again, if you're thinking about having employees, not only do you have to pay their taxes, you have to pay taxes for even having employees, period. So you want to be careful on how you want to actually pay your employees. Okay? So again, we're going to go through each step for this whole entire process. Now, the very first thing you got to do is, before even having employees at all, you need to submit to the Department of Employment, Training, and Rehabilitation. Oh, I thought it was Resources. So basically, in Nevada, if you guys come from the One Stop or come from Dieter, this is the exact agency that you guys are coming from. Okay, so that means they're the agencies that keep track of every business and whether they have employees or whether to find them a job. So they act as a dual company. They act as a person who keeps track of the employees, but they also act as an agency to help those who need to find employment. Okay, so make sure that in Nevada, every state's going to be different. It could be, I don't know what it is in California, but I just know that in the state of Nevada, we have it here. It's called the Department of Employee Training and Rehabilitation. Okay, and you need to submit to them a W-2 form to the IRS that gives you a list of all the new employees that you have in your company, and each one is going to have their social security number. It's going to give a detail of what kind of job they are, what kind of employee they are, and XYZ. So you need to have all of their information as far as an employee for the employer to have. Okay, so you need to make sure that you submit this to the IRS. And so then the IRS can be able to find those individuals and also place them under whatever taxes that they need to pay or to take out of their paycheck. Okay? So that's very important. That's the first thing you need to do. Okay? Second thing is you need to collect a W-4 form from employees. Now, this is very important because a W-4 form pretty much tells you exactly what the employer has, what the status of the employer is, whether they're filing together or jointly, or they're going to file separately. Do they have kids? XYZ. Okay, so this is what if your employee wants to take more money because they have children, right? They need more money because they have children, right? Or if they're the head of the household, they're the one that's bringing in they're the one that's taking care of the family, or they're the one who's um, has a dependent or a disabled individual, right? For any of those things, right? The W-4 form must be collected from every single employee that you have in your company. And if they don't, then you're subject to make the conclusion that they are going to be single and they have no tax withholdings. So they're going to be charged the highest percentage for the tax bracket. Okay, so that means they're going to be hit with the tax at a higher rate. Okay, so again, I want to take this time to real quickly go ahead and go over this form actually. So this form is actually very different than the one for the 2019. The 2019 was a lot more easier to fill out. This one, they actually changed the form because nowadays we have people who have multiple jobs. They can either do two jobs, or they can do they could do Uber on the side. And everyone that's done that now needs to have to file for the new 2020 form. Okay, so you cannot fill out the 2019 form anymore because we're in the middle 2020. So you need to start using this form if you start employment as of today. Okay, so this one, again, it is a little more complicated. The very beginning is straightforward, right? You're going to indicate your name, your social security number, and then each one is going to ask you pretty much questions that do revolve in your life. So for this one, it's going to be are you applying for this? Do you have another job? And that's exactly how you're going to fill it out. And if you have dependents or children, you're going to have to calculate this on your own. It's going to be a little different instead of just claiming I have 3 children. Okay, so I'm going to, therefore, my withholdings I want to take is going to be this. Or I need to claim this. I need to claim that. So this form is just a slightly different, and it's going to be based on an annual rate. So basically, based on how much you spend per year. Whereas the 2019 form, again, it's so much easier. 2020 is probably a difficult form, and you may need to seek a special advisor to help you fill out the new 2020 form. So this one's basically saying, how many jobs do you have? If you do, are they your primary job? Are they your secondary job? You need to list all of those information out. And basically what you're going to be doing is based on that assumption, this is how they're going to tax you based on that. Because again, with society, right, people can have multiple jobs. People can have side jobs. All of those XYZ. Okay, and this is just explains each section. Okay, so 2020 form is to me harder than the 2019 form. And if you have seen the 2019 form before, it's pretty straightforward. You just select, yes, I'm single. Yes, I have children. Yes, I want to claim them. Yes, I have all this. And you total it in a box where it says how many total withholdings do you have. And that is based off of that. And it's so much easier to calculate. But this one, it's based on a dollar value. Okay? So I just wanted to show you that for those who plan on getting a job today. All right. All right. So again, that is that. Now, third thing that you need to determine is how often are you going to pay your employees? So you do have a few options, okay? You can either pay them every day, you can pay them every week, every 2 weeks, or every twice a month. Okay, those are the more common ones, or monthly. Rarely do I see quarterly unless you're like a billion, a billionaire dollar company, or you're the owner of the company. You could take money whenever, or you could either do it every quarterly because you don't need the money, right? So more common ones I see would be daily, weekly, bi-weekly, semi-monthly, and monthly payments. Okay. Yes. So for anyone that's usually on a government, whether I mean like some kind of government supplementary, you're more likely to be monthly. But if you typically, most companies are either bi-weekly or semi-monthly. So the difference between bi-weekly and semi-monthly is bi-weekly you get 26 paychecks because you get paid every 2 weeks. And there are 2 months that you get paid 3 checks a month. Whereas semi-monthly, you're gonna get paid twice a month. So usually, it's typically on the 15th and the 30th of every month. Okay, so that's the difference between those two, and those ones are more commonly used. Okay, so it's great to understand your payment period because it's going to also determine how you read the table, which I will go ahead and talk about in a second. So the first thing is, how much income can be earned? Okay, so this is where compensation comes into play because, again, depending on your company, do you offer, besides the compensation, are you going to have them work for you every hour? Are they a wage base? Are they a salary base? Do they get commission? Are they getting paid for sick pay? Do they get the opportunity to do overtime pay? Anything that you offer as part of a compensation for their work is going to be determined first. So again, if they're wages, typically you can offer them pretty much a lot of things, okay? If they're tipped, anything that they can earn on their own. And then salary is usually they get paid the same amount of money every month. Okay, but the only thing that they can't do is that if you do offer it, they can have bonuses for doing such a good job, or XYZ, maybe they didn't use their sick pay, so they can get they can earn a bonus at the end of the month or end of the year, whatever it is, right? So there are some differences, but typically it is going to be based on what your company offers your employees. Okay, so do you even offer sick pay? Do you even offer PTO, paid time off? Okay, so again, this is also going to be based on the difference between the company that you're working for. So this is actually outdated. In the state of Nevada, okay, so I just heard the news recently, I believe last week or on Monday, I can't remember, but I heard the news and they said that the new minimum wage is $9. Whoop, whoop, 75 cents more. But anyways, so currently, as of today, the new minimum wage is $9.
What was it before?
$8.25, right there at the bottom.
Goodness.
I know.
It sure is.
That's what I'm saying.
Wow.
75 cents. I mean, that's
Wow.
exactly. I feel you too. Yes. Yeah. The minimum wage now in Nevada is finally $9. Okay? Minimum wage, okay? Yes, so that means any grocery workers, they are mandated to at least pay either at $9 or they could pay more, but no less. It has to be $9 or more. All right? All right, and then next you're going to determine what they can take, either whether they can take off of their paycheck or what they can claim as deductions as part of your paycheck. So, actually, wait, hold on. What did it? Okay, other deductions and other things that they can take from the paycheck. So again, if you offer your employees fringe benefits, meaning, let's say, I offer discounted tickets to go to Disneyland. I don't know. Just throw an example out there. Or maybe I have season tickets that I can get discounted for one of the Las Vegas shows here in Vegas, right? That is considered a fringe benefit. Or anything like I can travel, right? All those things are paid for. If there's a convention going on, we pay for your hotel, we pay for your food. That's considered a fringe benefit. Okay, so that's actually going to be deducted from your paycheck. So technically, it's not technically a benefit for you.
Oh, they deduct it?
They deduct it from your paycheck. So it doesn't. It's kind of like, oh, I offer these fringe benefits. They don't actually charge you based on what kind of benefits you take. They just take it out of your paycheck. It's like an even amount of things that you can take away from. Okay. So little did you know, you're not actually getting a benefit out of it. It's actually paying out of your pocket already. So that includes meals, okay? If you offer meals at the workplace, right? You offer them to pay for your meals. It actually comes out of your pay, but not at a big percentage, right? Let's say, for example, I pay $10 for your meal, but you also pay $10 for your meal. So that means I take $10 out of your paycheck, but you get a $20 voucher to go buy whatever you want. So yeah, little did you know, it's not truly a benefit. Other things such as holiday pay, that is considered a benefit because you get paid extra over the holidays. Vacation pay, sick pay, all of those things. Retirement plans, those are deductions from your paycheck, because obviously if you have a 401k plan, the company's not going to pay for it. It's going to be whatever you put into your paycheck. So they're going to either match it or they do whatever percentage that, they claim. And then again, insurance, so anything like, whether it's vision, whether it's dental, anything that the company provides for you will be a deduction if you take that extra insurance. Okay. So again, how do you record it? It's pretty straightforward. You either have a clock-in tower, clock-in logs, timestamp cards, activity logs, anything that you want to keep track of your hours, XYZ. It's pretty straightforward. All right. Let me see if we're good on time. Okay, it's 2:30. We'll push it till 3. Since we didn't get started too. We got kind of started late. All right. So next is going to be federal income tax withholdings. Now, this is the very first start of the preparation for the payroll. Okay. So what you're going to do is, after you've calculated all of those deductions and stuff, you're going to get what's called a gross wages. Okay. So what your gross wages is going to be all of the money after you've taken all of the deductions and all of the benefits that you offer for your employee. And what happens is, this is the amount of money that you're going to be taxed by the federal government. Okay, this is your contribution to society. Okay, so again, this is going to be based on everyone's individual needs, as well as what they turned into you as part of their deduction and everything. So again, if my coworker, right, if she's married and she wants to claim as a status as together, right, as part with our partner, hers is going to look different from mine, which I'm single, I got no children, XYZ, right? I'm going to get taxed at the highest rate, where she's going to get taxed at a lower rate because she's filing with her husband. Okay? So that is exactly why each individual employee, you actually have to calculate them differently. Not every person is going to be the same. And depending on how much they earn, so what if my coworker's been there for a long time? She gets paid $20 an hour. And I've only been working here for quite some time. I'm only getting paid $15 an hour. You also have to calculate how much difference. So based on my earnings, it's going to determine what percentage I'm actually going to be taxed at. So again, the higher the wage, the higher the percentage rate's going to be. So again, we are going to be looking into what's called the circular E table. So what the heck is a circular E table? I will mention
Can I
it.
just ask one question?
Yes.
Total earned incomes, that's also considered your gross income, correct?
Yes. There's, it's kind of yes. Because at the end, after you've gone through your taxes, then you're gonna get your we call it net income, right? So gross is what you've earned completely after all the benefits and deductions have been taken out. Okay, that's the amount that you're going to be taxed at. Okay,
And then you get your net.
and then you get your net. Yes. So there are two methods of how we're calculating this. Okay, there's the again, we're going to be using the circular E table, which I'll go ahead and show you an example of what that is. There are two different types of way you can calculate it. You can either use the percentage method or you can use the bracket method. So again, they need to be determined by a few things. It's going to be one, by the amount that you earn, two, the payroll period, so how often you get paid, and it's going to be based on their marital status, as well as the number of total of withholdings that they actually have. Now, the number of totals withholdings is going to be actually separate because that was for the last year's method. Okay? This year, it has changed drastically because of the new form of the 2020 changed. Everything's changed. Same thing with the bracket. It's not going to require you to have those information. The only thing that's really different is the bracket method is going to be based on the actual number that you earn. Okay, where the percentage method is going to be a group of numbers. Okay, but I will not go over the bracket method because it's actually more complicated. The preferred one's going to be percentage method. So again, this is what the circular E table looks like for the percentage method. Okay, you're gonna get it. It's gonna look just like this. It's gonna be based on your pay period, your marital status, and how much you've earned through how much your actual gross income is right now after all of your taxes have been taken out. Okay, so again, I will show you this. You can find this form on irs.com. It's irs.gov /publication 15. Make sure it's publication 15. Oopsies. So this is what it looks like if you were to go to, this is what the tables actually look like. So again, it's going to be based on first, how often you get paid and your marital status. So again, I only copied the ones that you commonly see. But yes, there's a bunch of these tables, and again, you can find them at irs.gov /publication 15, which is the employer's tax guide to calculating taxes for your employees. Okay, and here they give you directions on how to do it. Now, there are two ways, right? Because they have one using either the 2019 W4 form, or they also have the one where you can calculate using the 2020 W4 form. In this class and this class only, I am going to teach you the one where you're using the W4 form from 2019. Okay? Reason being is because, again, 2020 is so complicated that right now I don't even understand how to calculate it. Okay? And this was dropped in since I believe November of 2019. They dropped this new form, so they had to change the way you calculate this. And this is going to be how you calculate manual payroll. So again, you're going to be looking at the top part, which is table number 6, which is going to give you your total number of withholdings, okay? For one withholding, depending on what pay period you are, is going to be determined how much you need to calculate out of it. So again, this will make all sense when we actually start looking into how to calculate the payroll, okay? So again, you can find this at irs.gov/publication15, okay? And don't worry for you guys, I'm not going to have you guys look at that. What I'm going to have you guys look at is going to be, I believe I uploaded this onto the website, the Google Classroom. So you have it readily available right here. And for the sake of this class, I'm going to provide all tables. So you don't need to look up the specific one. Okay, I've already done the work for you. Okay, all you have to do is understand how you use the table to calculate the rest of the problem. Okay, so let's go back to the slideshow. Okay, so 15 more minutes. Okay, so how to do the percentage method is going to be these is it 4 steps, okay? So again, I'm going to explain every single step, okay? This is just giving you a guideline of exactly how you calculate it. And I will go ahead and go over it step by step. So the very first thing is you're going to have to collect the W-4 form from your employee to determine the number of withholdings from the employee. So again, we're using the W-4 form from 2019. I have an example of it. Actually, let me go ahead and show you the example so you know what I'm talking about. Okay, so it's going to be in this one under chapter 11. Let's see. No, not chapter 11. My bad, chapter 10. Let's see, do I have the 2019 form? Uh, 2019 is here. Let's see what's in here. Okay, I was supposed to have it, but if I were to click this, right, I think this is it. The W-4 form. No, that's not it. This is the text bracket. I don't have it on hand. I should have it somewhere here, but what happens is the W-4 form, you're going to have a small little area that is going to show you how many number of withholdings that you have, that you claim. So if you guys filled out the W-4 form in the past, it should be all the same. It hasn't changed until 2020. That's for sure. I don't know if you guys remember or not. It's been a while, but you should have filled it. When you fill it out, you calculate all the numbers that you've checked, and you give them a total of how many withholdings that you can claim. Now, the maximum that you can claim is 10. From what I know, the maximum you can claim is 10. But in this case, you need to collect that information and determine that number, because the first step you're going to do is you're going to make sure you go look at your table 6, and you're going to determine which payment period you're in and how much withholdings you have, okay? So let's go ahead and go for the example here. So number 1, L is a single woman with 2 with two dependents, okay? She makes $15.25 an hour and worked a total of 45 hours, okay? Payroll period is going to be weekly and step one. So now we need to calculate the total earned wages. So let's go ahead and figure that out. So we know that she works $15.25 an hour. So how much is she supposed to earn in total?
$686.25.
That is correct, okay? So here we calculated $15.25 times 45 hours, which gives us a total of $686.25 that she's earned within that week, okay? So again, in here we know that the second thing that we need to do is we need to determine the number of allowances. So again, with the W-4, it should be tallied up for you automatically. And what you're gonna do is you're gonna see here, she's single, so she's not filing with anybody. However, she has two dependents, so she wants to claim for those two kids or whatever they are. So she has a total of two withholdings that we need to calculate. Now, the first step that we got to do is we got to determine what that number is going to be from the table number 6. So table number 6, if we look at the weekly, we see that it's going to be $83 per withholding. Okay, so if it's going to be $83 and she has two of them, it's going to give us a grand total of $166. Okay, and this is going to be subtracted from our total earned to get our gross income. Okay, so sorry I changed the formatting and the wording for it. So if I were to subtract the withholdings from the total earned income. So if I take 166 and I subtract it from the $686.25, what do I get?
$520.25.
Yes, you're gonna get $520.25 is your total amount that's going to be subject to be taxed. Okay, so obviously I didn't.
That's her gross income.
That's her gross income. That is correct. Okay. Okay, that because we didn't offer any overtime, we didn't offer anything, so there's nothing about any benefits for that. All she does is just a worker. She only works. Okay, so here, this is how much that she's going to be subject due to tax for the federal income tax withholdings. Okay, so now the step 4 is going to be looking at the table, the circular E table, and looking at her marital status and how much she made. So we know that she's single. She made $520, and we know that the payroll period is weekly. So using the circular E, again, we're going to look at weekly. She's single, and she made $520. So did she make more than 263? Did she make less than 845?
Yes.
Yes. So this one right here, we're gonna go through steps A, B, C, D, and E. Okay? And how this works is you're gonna use that row. Okay, so we know that it's going to be from 263 to 845. Okay? And how we're going to calculate it is we're going to subtract E, we're going to multiply D, and we're going to add C. Okay? So again, we determine what A and B are. We're going to subtract E, multiply D, and add C. And what I mean by this is now that we know that she belongs in this bracket, the first thing that we need to do is the government lets you keep $263. Okay? For anything that you made over the $263, you're going to multiply it by the percentage that you belong into. So in this case, you belong into the 12%.
12%.
You're gonna multiply the remaining money with that. And then you're going to add an additional $19 because that is how much the government is going to tax you regardless of how much money you're going to make. So the 12% is going to be based on any extra money that you've made. Okay? So let's go ahead and review it here. So again, we are going to take the $520.25 and we're going to subtract the $263, which gives us a total of $257.25. We're going to take that $257 and we're going to multiply it by the 12%. And once we've done that, we've determined that we have an excess of $30.87, which we need to add an additional $19 to, because that's how much the government's going to take us away from our paycheck no matter what it is. And we're going to get a total of $49.87 as our total federal tax withholding. Okay? Any questions on how we just solved for that? So again, once we've calculated our total earned income, we subtracted the number of withholdings that that person claimed to give us our gross wages, whatever you want to call it. Then we're going to come to this table. We're going to define the pay period. We're going to define the marital status. And then we're going to define how much she made and what bracket she belongs to. So in this case, she earned definitely more than $263, but it's less than $845. So right here, A and B, we've already found our A and B. Now we need to subtract E, multiply D, and then add our C. Okay? Okay, so here, again, we're going to subtract this $263, which is how much the government lets us keep. Then we're going to, anything excess, so anything that we've claimed more than that is going to be subject to the percentage that you belong to. So you're going to multiply it by the percentage to get this $30. And once you get that $30, you're going to tack on whatever amount that the government's going to take from your paycheck regardless of how much you make, which is $19. And that gives you a grand total of $49.87. But that's just federal income tax withholding. Okay? So I'm going to go ahead and stop here and take a break.